Okay, next up the dollar yen. Now the yen has gathered a bit of strength over the last couple of weeks as a safe haven instrument. There's been some money coming in for the yen, much like the Swiss and the gold, as the concern around the world, particularly in the US, is coming to the fore. Now the dollar, as we know, is weak, so the dollar yen is next up in terms of the opposing strength and weakness. Now again, like the dollar Swiss, I mean we've made new territory to the downside, bar the low made from the washout here, where that was the effect of the tsunami in Japan. Now this got heavily bought into, not least by the Bank of Japan intervening. This is, I mean, the dollar yen is, I mean, we have to look at it because it's broken out of, and we're way down below the 81.12, which was the 1995 low, in and around the Kobe earthquake. Now we've taken out the lows that were holding the market, and we've traded through with momentum from these lows here. We're making headway south. There are a couple of things we have to be a little bit wary of. One, the short covering, the possible short covering potential in the US dollar, and B, intervention from the Bank of Japan. This is territory where we know they've intervened before, so yes, we have to accommodate the short side, but we have to be aware of the limitations. But the trend is certainly in place, and in terms of our analysis, I mean, structure wise, the structural short is not until we get to here. We've got a little way to go, but in terms of structure, it's not till the 76.36. So the structural short is 76.36. The structural long, much like the dollar Swiss, we have to take a momentum low in the downtrend from the daily chart as the very first possible long point on the daily chart, and that is the 78.45. so the structural short 76.36, the structural long is 78.45. Same applies here as applied with the dollar Swiss. We don't have a failure to make a new low in this dollar yen yet, which doesn't give us a trend changing point, i.e. it doesn't give us a structural failure. So we have to bear in mind this 78.45 is merely a long with respect to failing to push down from the momentum low. It's not we don't have an opportunity yet to identify what we call a structural failure. It's just using this significant level here as the long. So there we have the two levels for the structural short and the structural long. Homing in on the 200 tick, then we have the blue, the green, the green and the red lines here are going to be our long and short points. Now, starting with the short first, because that's where our bias lies in the dollar yen. The short is straightforward. We want to take the 3-day, 2-day and the 1-day low out, and the nearest low made in the most recent session. That's a 77.44. That would be a clear short point, 77.44 in the dollar yen. Should we take that out, your short stop therefore wants to be at the 77.70. We take that point to accommodate the 2 daily lows here. So your short stop is 77.70. So the short 77.44, the short stop 77.70. In the other direction, if we need to identify a buy point, we have to first of all understand that's going against the macro trend. But if we wanted one, we'd be taking the 78.02, which is the 1-day high. The 78.02 from this price, from the current price here, we'd have to take out the 1, 2 and 3-day low to get there, and we could just get maybe a short covering reaction at this daily high as the shorts get frustrated that the market is not carrying on moving down. So the long point here would be the 78.02, and were you to go long there, your long stop would be 77.80. So we want it back inside the daily high, and if we take the 77.80, we're accommodating the 3-day low as well. So we want our stock to accommodate as much as we can in terms of reference points in the market, and at the same time not being too far away. So the 77.80 would be the long stop. So we're only 20 pips away there. Okay, so the long point 78, the long stop 77.80, the short point 77.44, the short stop 77.70. Okay, the idea here is we don't want to get caught in the mean reverting price action coming back into the range. Okay, so that's the dollar yen.